Welcome back to Rockstock Channel. It is Tuesday, October 7th, and we are back with another installment in our Getting to Know You series. Today, we have AJ Saverimutto, Managing Director of Wildcat Resources. Wildcat's main focus is on the Tabba Tabba Lithium Tantalum project, which it acquired a bit more than 2 years ago and has advanced to a pre-feasibility study over the summer. Tabba Tabba is blessed with excellent infrastructure, proximate to Port Hedland and some of the world's largest hard rock lithium mines, namely PLS's Pilgangoora and Mineral Resources Wodgina. Wildcat trades on the Australian Stock Exchange, ticker symbol WC8. The company last raised equity during the Western Australia spodumene M&A boom in November 2023, raising 100 million Aussie dollars at 76 cents. The stock today is 21 cents. Current market cap is about 281 million Aussie, or about 100 million 80 US. Current cash balance is about 55 million Australian dollars. For disclosure purposes, RK Equity is not, at present, a strategic advisor to nor invested in Wildcat. And of course, we are not financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. Note that a written summary of this interview will be published in the next edition of RK Equity's Lithium Ion Bull. Please register your email at rkequity.com if you'd like to receive this newsletter directly to your email box. Wildcat is covered by several sell-side analysts, including Argonaut, Canaccord Genuity, and Yours Hartley's. You can access this research from Wildcat's website, wildcatresources.com.au. You can also access a 4-minute video overview Wildcat produced recently, some of which you'll see in the background throughout this interview. Please also follow Wildcat on X, at Wildcat, res_WC8. Before my partner Matt Fernley digs into the Wildcat story, we'd like to thank our two sponsors, Lithium Royalty Corp and USCF Investments. Lithium Royalty Corp, which trades on the Toronto Stock Exchange, ticker symbol LIRC, is a lithium-focused royalty company with a diversified portfolio of royalties on mineral properties around the world. USCF Investments is an ETF pioneer for nearly 20 years, with 15 funds providing exposure mostly to commodity futures, such as the CPER for copper, ZSB for battery metals, USG for gold, and SDCI for a broadly diversified commodity exposure. To find out more about USCF, watch our inaugural episode with the CEO and visit ucfinvestments.com. And with that out of the way, welcome AJ. Matt's going to dig into your property and PFS, and I'll join in a bit later. We'll talk some market commentary.
Cool. Thanks, Howard. Hey, AJ, how are you doing? Good to see you.
Good, Matt, yourself?
Yeah, very good. So I think we've known each other for a couple of years now, but for the audience, can you just give a little bit of a background on yourself, a little bit of an introduction?
Sure. Firstly, thanks for having us. Really appreciate coming on your show. My background, I'm a mining engineer and accountant. I studied here in Western Australia in Kalgoorlie, in the WA School of Mines. Did a number of years here in open pit and underground. Then went over to the Grasberg mine that Freeport-McMoran owns in Indonesia, a copper gold mine, one of the biggest mines in the world. Worked there for about 10 years and then ended up as mine manager there for a number of years. Then came back to Western Australia, worked for BHP Billiton for a few years and worked for a number of big companies and wanted to do my own thing. So I formed a small company called Offtake Mining and purchased the Beta Hunt mine, nickel gold mine. I brought that out of care and maintenance and got it into production, sold it to Karora Resources. They had recently sold it to Westgold for $1.2 billion. Since then, I've been working for a private equity group out of the US, and then this project at Wildcat came up. I came on the board, had a look at it, looked through the drilling, raised some money, and then thought, being on a number of projects that I've built in the past, and thought this is a project. It's on granted mining leases. It's close to port. It's going to be low. It's going to be a big open pit, lowest quartile for operating costs, and it was very attractive. And I came on board as MD about 2 years ago.
Cool. Okay. So a mining engineer and an accountant. That's a double negative, isn't it? If ever I heard
Yeah,
it.
it does help. I don't really use accounting that much. It's mainly a mining engineer and mainly based out of operations.
Cool. Well, moving swiftly on before all of our mining engineers start throwing rocks at me. So the Tabba Tabba asset is the first asset. Can you explain to us how Wildcat picked that up? Because it's quite an interesting story, isn't it?
It's certainly an interesting story. Initially, Wildcat had a gold resource called Mount, and we still have it, Mount Adra, nearly 800,000 ounces in the ground. And the board decided with management that it was looking for a lithium deposit, saw the demand coming for lithium, identified a number of prospective targets. But Tabba Tabba was interesting because GAM had 4 assets. They had Greenbushes, they had Wodgina, they had Pilgangoora, and Tabba Tabba. 3 out of the 4 have become like the largest hard rock mines in the world. And Pilgangoora is only 47 k's away. Wodgina is only 87 k's away. Our geologists looked at the resource and the data and identified the mapping was very similar to the other 3 projects, and ran a number of ratios and thought there was going to be lithium there. So convinced our board that we should purchase the project, and the rest is history. We very quickly, in May 2023, purchased the asset. We started drilling in July. There are mining leases, so we were able to move quite quickly. Hit our first hole in September, nearly 100 meters at 1.1%, and then moved very quickly in November, December. We raised money, had 6 rigs drilling on site. We knew, we certainly believe it's going to be a mine in future. So when we drilled it, it wasn't just to inferred, we drilled it to indicated. So very quickly, when we have a resource, we can move it into a reserve. So we put out a resource in November last year, and by July this year, we put out a PFS and a reserve.
Cool. Okay. So we'll talk a little bit more about Tabba Tabba and the PFS in a second. But you've also recently made a discovery at the Bolt Cutter Central project. Can you just talk a little bit about that discovery?
Yeah, certainly. Bolt Cutter is very exciting for us. We have over 1,500 square kilometers of tenure in the Pilbara that we think is prospective for lithium. We've gone ahead and stitched up a number of areas that we think are prospective for lithium. Bolt Cutter is only 10 kilometers away. But in the background, while we were drilling Tabba Tabba, we worked out all the other remaining projects, and we're still working them up. We've gone through mapping, we've done soils, we've done aerial geophysics, and identified Bolt Cutter. The soil anomaly was nearly 1.5 to 2 kilometers long, and there was nearly 5 trends. So it's about 2 or 3 times the size of Tabba Tabba. And one of the rock chips came in at 4%. So we had to drill it. We had drilled a few other deposits, or other targets that we thought was prospective. We normally go in and drill some initial RC program if all our geophysics, all our mapping, all our soil line up. Some of them come in, some of them don't. But when we drilled Harry and Hermione, we got nearly 20 meters at 1.7%, 13 meters at 1.4%, 13 meters again at 1.3%. So it's stacked loads, very different to Tabba Tabba. Tabba Tabba is nearly 100 to 150 meters wide, very little internal dilution, just on the dilution on the hanging wall in football, while this is more your stack loads with a higher grade. So a swarm of pegmatites. We don't know whether it'll all join up at depth. We've got a rig on site now drilling it out, so we'll know in the next few months.
So I'm guessing that your head of geology is a science fiction fan or something like that.
He is. So we got the Star Wars and then the Harry Potter. So it's exciting.
Brilliant. Okay. Well, we'll keep an eye on the results from that with interest going forward. Coming back to Tabba Tabba, obviously you said that you recently published a pre-feasibility study. I mean, I think this project is very interesting from the point of view of the infrastructure. It's only 80 kilometres by road from Port Hedland. And as you said, it benefits from existing mining leases. So you could go for a quick startup if you wanted to. So can you give us a short summary of the conclusions from the PFS on the project?
Yeah, for sure. So when we came out with a PFS, it was a base case scenario. Even the resource is only drilled to 450 meters. So we didn't want to spend shareholder money drilling just at depth, just to have a resource in. So we've drilled to 450 meters. The PFS is a base case scenario. So it does not include Chewy, Han, and Hut because we're waiting on further metallurgical test work. Chewy, Han, and Hut actually sit inside the pit for layer. It's a base case scenario. We assumed a contingency of 15% on capital and 10% on operating. We took a plant, lab to plant. We took a 5% reduction on recoveries. We assumed the strip was all done in the first 5 years. Strip was done all in the first 12 months. So we put $144 million of pre-strip up front. And we've got new geotech drilling that should further enhance the stripping ratio. So we think we're in the lowest quartile for production costs. Why is that? We're close to port. It's only 35 Aussie dollars to transport the concentrate to port. It's not 300 or 500 kilometers away from port. It's close to port. Port Hedland's one of the largest ports in the world. There's a lot of infrastructure in Port Hedland. It's going to be a large open pit. The tons per vertical meter for Tabba Tabba is very high. Coming from Grasberg, I know the scale matters. So if you have scale, you have low operating costs, excellent geotech conditions, and it floats really well. The product floats really well. So we've got a geomet model that we look at the grade versus metallurgy. So
And
looking at
what's the
PFS
Capex?
results.
What's the Capex all in, including the pre-strip?
So the Capex, including pre-strip, is about $680 million. But
Australian.
That includes Australian, but that includes stripping Chewy as waste and also upfront capital for stripping everything entirely. So we think there are certainly benefits there to further enhance that capital and get it lower.
Okay.
And
then the Opex on an FOB basis?
So the Opex, the C1 cost is about 541 Aussie dollars. US dollars.
Yeah.
And all-in sustaining cost of about 650.
Okay.
So
and is that
the
for
PFS results
5.5?
5.5.
Okay, cool.
So using consensus pricing, the free cash flow is about over $3 billion Aussie dollars for free cash flow, NPV of about 1.2 billion. A 17-year mine life to start off with. We'll start off with 2.2 million tons to start off. And then that's stage 1. And then stage 2 is 4.5 million tons. So it starts off with about 300,000 tons of 5.5% concentrate. That expands to 600,000 tons of spodumene concentrate.
Okay. And obviously you mentioned that Chewy, Han, and Hut, I can't get over those names, weren't in the mine plan. And you talked about sort of Chewy effectively being waste in the current mine plan. So if you included those, how much resource would that add? And does that extend upfront production capacity, or does it simply extend the life of the project?
Yeah, so it's about 11 million tons of resource that it adds. If all of it came in, it sits inside the pit shell for layer. So we got to take it out anyway. So that comes in. Also, what I didn't mention is the tantalum resource. That will be included as well. We've got the tantalum grades about 4 times any other mine around the world. So that we're doing further work on the metallurgy for the tantalum. That'll come in as well. That helps cash flow. Chewy is from surface. So, that's upfront cash flow that'll come in to the mine plan and further help the stripping ratios and cash flows.
Okay, and I understand in the current mine plan, you're starting open pit, and then there's a potential to go underground as well. How much is open pit and how much is underground?
Yeah, so above 450 meters is the resource. So 79% is going to be an open pit and 21% is going to be an underground. But the early mine life is all open pit. The reason we've gone underground is Luke is a blind discovery. So we've got a box cut and then we'll access it. But post the 17 years, it'll below 450 meters will be an underground. So once we set up the underground with the new geotech drilling, we think we'll have larger stopes there. And the future of the mine post 17 years will be an underground. So a large amount of open pit in the first 17 years, and then slowly we'll move it into an underground post that.
Okay, cool. And you said it floats well in the met test work you've done. I understand, is it whole of mine float?
Yeah, we've done a lot of met test work. We've done the DFS is nearly over 3 ton of sample using site water. It's a whole of mine float, so it's a whole of flotation, a 2.2 million ton circuit that goes up to 4.5 million tons. We're putting in the crushing capacity of 4.5 million tons up front. So for the first 6 to 7 years, it's only going to be crushing day shift because it's got spare capacity. And the float cells will put stage 1 float cells for 2.2 million tons, and then a sister of 2.2 million tons will come in year 7 for the further capex of 97 out of free cash flow to get the 600,000 tons of concentrate per year in year 7. So it floats really well.
Sorry, what sort of grind size are we talking about on that?
The grind size, it's a coarse grind of 180 microns, but we got the capacity to go to 150 microns if we need to.
Okay, that's cool.
So our test work has got 150 microns, 180 microns, 212. We've done a range of test work to work out what's best. The plant's designed for 180 micron.
Okay, and recovery to 5.5%?
So the recoveries go between 70 to 80%, depending on the grade. But on average, it goes between 75 to 77%. We've taken a 5% haircut to show the plant, the lab versus plant.
Okay.
So just to be conservative.
And these are quite massive ore bodies, aren't they? So there's not so much contact zone in there. So how much variability of sort of recovery is there?
Yeah, we've done a lot of variability test work as well, as we announced, and now we're doing site-based variability test work. We've done a full program that we're now running through with site water. We aren't seeing too much variability because it's one big ore body. It's nearly 100 to 150 meters wide with very little dilution on the hanging wall and footwall. And that bodes well for a low iron content through the product. So we get a very clean concentrate. Cool.
Okay. Recently, we've seen quite a lot of government activity in the sector, particularly around funding, particularly in the US recently, very recently. Are you in discussions with the Australian or the US governments on funding mechanisms?
Yeah, so we've done the PFS to a high degree of accuracy so that we can very quickly go to a DFS, right? So we've done the PFS to some of the areas in the PFS are done to a DFS standard. We think the funding options include debt, offtake, strategic investment, direct investment, prepay, and government funds. We've already contacted a number of these areas and government as well to see what our funding options will be so that when we had the DFS completed, very quickly we can fund it. So our whole thing is to de-risk the project. So we want to understand where our funding options will be with changing markets. We want to have all 5 of these options investigated.
Okay, cool. And obviously, quite a few catalysts to come through in the next 12 to 18 months, moving to feasibility study, further drilling. What are the main ones that investors should focus on?
Yeah, so in the next 12 to 18 months, we're still in exploration phase. So we've got a rig drilling at Bolt Cutter. We've got 5 trends there to check out. So we've got RC drilling on site at the moment. So we'll have news flow from there. We want to increase our land holding in the area as well. So we're looking at different opportunities there. We'll have our mining agreement with our First Nations. that we'll have in place. We'll have the Chewy and the tantalum test work coming back. So we can have those results out to market. We have further rock chips from other prospects that we're working up to drill ready status. And if those rock chips come out good and we want to drill them in the next 12 to 18 months, we will try test those targets as well. Possible resource reserve upgrade, resource especially with bolt cutter, as well as reserve with the DFS coming along. Our DFS results, they'll come out in the next 12 to 18 months, our funding options, and hopefully a financial decision to mine at some point.
Cool. Okay. So I'm a global investor sitting here in lovely cold London. What differentiates Wildcat from any other lithium development projects in the world? Why should I buy Wildcat?
Yeah, certainly we got some really key value drivers compared to any other project in the world. We're in the right location. We got the right asset. We have the right team. We're in the Pilbara, the biggest port in the world. We've got a camp. We've got a whole road in place. We're on mining leases. We've got a commanding land position. We're successful regional exploration programs that we're running. We found Tabba Tabba. We found bolt cutter. We've certainly got the right asset with Tabba Tabba. It's impressive in size, scale, and quality. We're getting excellent recoveries. We're in the lowest quartile for production costs. We're funded with 55 million Aussie dollars in the bank, and we're good users of our funds. And we've got the right team. We certainly have geologists that can sniff out lithium. And now we've got project builders who've built other projects coming on board, as well as guys with financial acumen that can build projects. So we certainly have the right location, right asset, the right team. And I certainly believe Tabba Tabba is one of the best undeveloped lithium projects in the world that will be part of the next lithium cycle.
And hopefully it's the right time as well, with fingers crossed that the lithium prices are going to start picking up as well.
We can only control what we can control, which is our costs and our accuracy of our studies. If we're in the lowest quartile for production costs, we should be fine in any lithium market, I would say.
Excellent. Perfect. Over to you, Howard.
All right, thanks for that, Matt and AJ. Before we get into a broader discussion, because I do want to pick up on some of those points you just mentioned, Matt, in terms of price and also kind of like relative value, or comparing the Aussies to some of the other names on the scoreboard. But we'd like to thank our sponsor, Lithium Royalty Corp, which holds a number of hard rock and brine royalties, including Core's Finniss project and Rio's Mount Catlin project in Western Australia. You can follow Lithium Royalty on X at @lithium_royalty, and visit their website, lithiumroyaltycorp.com. We'd also like to highlight USCF's Sustainable Battery Metals ETF, ticker symbol ZSB, which invests in metals, derivatives, instruments, and equities exposed to the electrification thematic. This includes holdings in aluminum, copper, cobalt, zinc, lithium, and silver futures, and equities like Albemarle, MP Materials, and Aluka Resources. And with that out of the way, I just published today, AJ, the latest lithium bull. And as always with that lithium bull, we're going to call up here the RK Equity scoreboard. And on the scoreboard, which we have now broken down into producers and emerging projects, and then within emerging projects, we have hard rock, sedimentary, DLE brine, and salar brine. Wildcat shows up here as the second largest market cap in the hard rock emerging project section, meaningfully below Patriot Battery Metals, or now called PMET Resources, and right in the same zip code market cap wise as Core Lithium, which is I guess a mothballed future brownfield development. In WA, the WA has been one of the most prolific areas of lithium success for investors over the last kind of 10-15 years. You mentioned you're super close. It's amazing. When I first met you 2 years ago, I was shocked. And we talked about that with Jeff Elliott when we interviewed him at Fast Markets, that like, how is it possible in that location when Altura and Pilbara and Wodgina were all being developed, that you could suddenly discover something, right there. Um, you talked about that a little bit, with Matt, but I guess just broadly the WA scene, there have been some talk that like they're now higher cost than some of the other locations. The market caps of that I just mentioned are meaningfully lower, than some unconventional projects in the DLE space or the sediment space. So I guess what are you hearing, in Australia? We just had you diggers and dealers actually a little while ago. I know gold is hot, uranium is hot. But as Matt said, and as I referenced in the lithium bull, mineral resources in Pilbara, were up 90% in the last 3 months, as was Ganfeng. And that to me, is potentially a leading indicator to where price may be. Wildcat is up 30%, which is not bad. And that's often typical. The mid tiers and the smaller ones, will follow, the leaders. But any color you can give us from Perth on what you're hearing and some of the dialogues you're having, to finance the project, it would be useful to discuss.
Yeah, from our end, our whole thing has been to de-risk the project, to make sure the project is de-risked so that we can very quickly take it into production. We're having a lot of feedback from downstream wanting to fund the project. So we think the lithium market's red hot with the number of inbounds we get on where the project's going, looking for offtake, looking for JVing into the project. So that's very encouraging. We see the demand consistently go up. We think we can put a product out to market at low cost because of the scale of the project. We're very much focused on our area. It's a very simple plant that we're looking at. It's a crush-grown float plant. It's nothing complicated. They use it in a number of different commodities. It's going to be mainly an open pit mine, and it's close to port. It's a very simple operation to get up and running. So we're focused on that. We're focused on our costs. We're focused on our models and delivering in a time frame. One of the key risks to us is, you can look at different people's predictions, but one of the key risks to us is missing that next lithium cycle when it comes in and not being ready. So we're doing everything in our power to get it ready and get it de-risked, as well as exploring for other opportunities in our portfolio.
And AJ, in these discussions with off-takers, do you get the impression that they are prepared to make prepayments to secure that offtake?
Yes, certainly. At the moment, we're unencumbered. We haven't given any offtake away. We want to keep that as part of our entire funding solution, that whether it's debt, whether it's offtake, whether it's government funds, or it's a mix of all those, or strategic, that's what we kept our offtake without giving it away. We think it's an important piece of the puzzle. We still have $55 million in the bank. We don't have to give our offtake away. But we are certainly seeing a number of parties coming and talking to us about offtake, as well as coming up the chain and being part of that build Capex. So we'll further those discussions. It's encouraging to see that sort of dialogue at a PFS stage, but certainly once we get a DFS done, then it becomes rock solid and we start talking numbers.
And in terms of, obviously you have a lot of meetings with financial investors. Are you seeing just recently more interest in the space, or is it sort of fairly wishy-washy at the moment?
Well, certainly we're seeing more interest in the space. We've just finished a roadshow a few months ago over East, and we had a number of really good meetings. I think we had 26 meetings with some really good institutional investors. We're seeing more interest in compared to 6 months ago or 9 months ago, which is good to see. We're comfortable. We want to bring this project certainly this decade into production, and we see the market certainly being there to get it in at that time. Even at the current prices, I think it makes a compelling investment.
Great.
And AJ, what's the nature of the downstream dialogues that you're having? Are they Chinese, ex China and Asia, European, US trading
Yeah,
companies? Like, what do you think?
mainly downstream Chinese, as well as Korean and Japanese, also Indonesian, Middle Eastern, Indian, so and North American. So there's a mix of people we're speaking to. Certainly downstream Chinese, they've set up their refineries, they're ready to go. But we're talking to a number of different people who are interested in the project and can fund the project. So and we're talking to them on the PFS numbers. So we're hoping to get out the DFS numbers that are better than the PFS numbers. But it's really encouraging that that sort of appetite is there from downstream.
Cool. And just maybe a little bit more broadly, there've obviously been some quite major moves in the US in the lithium sector in the last sort of 2-3 weeks or so with the Lithium Americas deal, etc. How is that perceived, and how is the US government stance perceived in Australia by Australian investors, Australian companies?
Well, I can't talk about other Australian companies. For us, that's exciting to see that, and we've seen Australian government investment into Australian lithium projects as well. Critical minerals are in the front of discussions, so we are talking to a couple of the government funds that fund projects. But it's certainly exciting to see government getting involved in lithium projects.
Well, you've done a good job. I mean, timing wise, you raised quite a bit of money 2 years ago. You still have 55 million Aussie, as you just discussed. I think weathering the downturns, preserving your balance sheet is critically important in these downturns, and you've not had to dilute shareholders in any way. And it looks like you've advanced the project with a robust, PFS with, some upside beyond that. So looks interesting. Is there anything you don't want to talk about other companies? Just again, there was a lot of activity 2 years ago. Hancock, Minres, M&A. You're not seeing really any of that yet. Do you have any sense of any comments you can make on that period of time versus now, and the trajectory we might see in the coming months?
Yeah, Howard, as you know, there's only so much I can comment on, but certainly I think there's a lot more interest in projects that are close to production, I would say, and with low operating costs. So yeah, I think there's a lot more interest back in the market for lithium projects that are pretty low risk and very easy to get into operations.
And I guess what's the labour market like in Western Australia at the moment? Because obviously that's always a great bellwether of how strong the industry is. Are you seeing shortage of trained mining professionals, or is it pretty easy at the moment?
Yeah, I think for the right project, I think we can get. Our key thing is to build a plant. We've already gone out to 5 or 6 different companies to get quotes on how much it would cost to build a plant. We certainly look at people who can build the plant and who have lithium experience and have built similar plants. But every time, we have used proper mining contractor quotes for the PFS study as well as plant quotes. So we're tightening them up for the DFS. But I certainly think there's a lot of interest in people who want to build proper lithium plants. So I think for the right project, you can get the contractors that are required, and it's close, right? Port Hedland's two odd hours away on a plane, and the site is only 40 minutes from Port Hedland, so it's a good site to be at.
Sounds great. AJ, I don't have any more questions. Matt, I think we're all set. thanks very much for this very detailed update. And I guess it's the second time we had Jeff Elliott, on, a year and a half ago. So it's been quite some time, and you've done a lot, and look forward to watching your progress further.
Thanks, Howard. Matt, thanks for having us on the show.
Thanks a lot.
Appreciate it.